Ladies and gentlemen, good day and welcome to Premier Explosives Limited Q2 and H1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Mehta. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. I, on behalf of Stellar Investor Relations, welcome you to all to Premier Explosives Limited Q2 and H1 FY23 earnings conference call. We shall be sharing the key operating and financial highlights for the quarter and half year ended September 30th, 2022. We have with us today the senior management team of Premier Explosives Limited, Mr. T.V. Chaudhary, Managing Director, and Mr. Srihari Pakalpatti, Chief Financial Officer. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainties. Documents relating to the company's financial performance have already been emailed to you. Now I invite Mr. Chaudhary to share his initial remark on the company's performance for the quarter.
Thank you, Vishal. Good afternoon, everyone, and thank you for joining the call. We'll begin the call with a key industry update, followed by an update on the company's operational performance during the quarter. On the defense industry, like we have been mentioning, and like you may also be aware, the government of India has an ambitious defense production target of $25 billion by 2025. This includes $5 billion from exports by 2025. The government's goal for India is to become a net exporter of defense equipment. The government of India has made many changes in recent years that have had a positive impact, and it has risen to become one of the top 25 defense exporters in the world. India's defense exports reached rupees 80 billion in the first half of this year and are anticipated to surpass the rupees 130 billion mark set last year. By the end of 2030, the government of India will be making defense equipment for itself as well as for the friendly countries. Make in India, make for the world is new motto for Defense Production Department. In recent years, the government has taken several steps to increase self-reliance, including increasing foreign direct investment in defense manufacturing, establishing a separate budget for purchasing locally manufactured military hardware, and notifying lists of weapons, equipment, and subsystems that cannot be imported. Recently, the Defense Minister has released a fresh statement stating that between December 2023 and December 2028, 780 components and subsystems will be subject to a phased import ban. With the latest indigenization push covering items used in fighter planes, trainer aircraft, helicopters, submarines, and tanks, the recent list of import bans consists of import line replacement units, LRUs, subsystems, components. These lists contain 2,500 items which are already indigenized and 458 items which will be indigenized within the given timeline. Contracts going to domestic businesses have increased. Over 10,000 MSMEs have entered the defense industry, and there has been growth in employment, R&D, startups, and innovation. And coming to specifically to the recent updates for missiles, as I have informed all of you about our productionization of missiles developed by DRDO, that is LR-SAM, MR-SAM, Astra, NGRM, and QR-SAM. The productionization efforts are going on, and now we have production of the final integrator BDL. And in addition to these domestic requirements, now as we have informed you earlier, we have developed rocket motors for export purpose, and those are now accepted by the customer, and they are getting converted. Almost 4 of them got converted into production orders. So this is going to keep us busy for the coming 3 years. Now coming to the industrial explosives segment, from the start of the current fiscal, things have been improving on the raw material pricing front. The raw material prices, which had skyrocketed up to almost 200% in the last 1 year, is now stabilizing, and also the supplies for the coal sector, pricing of the supplies to coal sector policy and all those have changed, and that has brought a little relief to the industry. In terms of demand outlook, India is rapidly industrializing, requires high power supplies and raw materials, which has increased the country's coal mining and quarrying activities. This signifies that India's demand for industrial explosives is growing rapidly, particularly in the mining industry, where products like coal, limestone, iron ore, and stone aggregates from quarries are produced. There is a significant supply-demand gap which needs to be narrowed down in near future. In financial year 23-24, the Ministry of Coal forecasts that domestic coal production will increase to 1.2 billion metric tons. In financial year 23, the demand for cement is predicted to increase by 7 to 8% to 382 million metric tons. Thus, there is a definite opportunity to increase the use of industrial explosives in the mining and related industries. Now, coming to our company's performance, we continue to move on our growth track. During the quarter, we have generated healthy cash profit of rupees 5.94 crores with our execution run rate improving, and given the nature of our cost structure, the operating leverage of our business will help us to generate better cash flows, which will be utilized towards strengthening our balance sheet. The changing business mix with the increasing contribution of defense segment will augur well for our overall margins. On the order intake front too, there has been good progress. Let me take you through the new order updates received during the quarter. Your company has recently signed a MOU with Hindustan Aeronautics Limited in the field of manufacturing, assembly and testing, storage and transportation of explosives for bombs and missiles. Received new order from Israel Aerospace Industries Limited for manufacturing and supply of warheads with total value of USD 537.500. That is 4.3 crores, and expects to be delivered by May 2023. Production and supply of booster rocket motors for a total value of USD 688,000, that is rupees 5.5 crores, and expected deliveries by March 2023. Your company also received an advance amount of USD 2.44 million, that is rupees 19.4 crores, towards the development of production lines and procurement of raw materials for the order received from the overseas entity for supply of rocket motors. Recently, your company has dispatched another PSOM-XL motor to SDSP Shar and become the first privately owned enterprise, a non-explosive unit, to have been successfully qualified for complete insulation lining and propellant processing of PSOM-XL motors to be used abroad, a PSLV launch vehicle. Premier Explosives Limited has produced the first ever PSOM-XL at a non-ice facility intended for flight use on PSLV C5X. These are some of our notable updates on quarterly orders. We are extremely pleased to report that our current outstanding order book as on September 30, 2022 stood at approximately 601 crores, which translates into 3 times of our financial year 22 revenues. The dispatches were sharp and placed as per our expectations. And regarding other rocket motors which are in the development phase, that is Pralay and BrahMos, as we reported in the last quarter, we have already reached the completion of TOT stage, and we are waiting for the FIMs to be issued by the customer to take it up to production level, and we are expecting this to happen before the end of this financial year. And MRSAM, we have already received orders against the requirement of Army and Navy. Now the order for the requirements of Indian Air Force is in pipeline, and we are hoping that that also will come to us before the end of this financial year. The total number of all these things are going to really give our Kattupalli and then Peppakandukuru units, both of them fully busy with supplies till the end of coming to financial year. Now I request our CFO to share the financial performance. Thank you.
Thank you, sir. Good afternoon, everyone. The result presentation for the quarter has been uploaded on the stock exchanges and on the company's website. I believe you all may have gone through the same. Now I will present the financial results for the quarter and half year ended September 30th, 2022. The revenue from operations for Q2 FY23 stands at 60.6 crores as compared to 55.1 crores in the corresponding period last year, with a 10% growth year on year. Our operating profit for Q2 FY23 stands at 7.2 crores as of compared to 6.9 crores in the corresponding period last year. The operating margin for the
Excuse me, participant, this is the operator. The management line is disconnected. Kindly be online while we reconnect them. We have the management line connected. Sir, you may proceed.
Right. Yeah. Thank you, sir. Good afternoon, everyone. The result presentation for the quarter has been uploaded on the stock exchanges and on the company's website. I believe you all may have gone through the same. Now I will present the financial results for the quarter and half year ended September 30th, 2022. The revenue from operations for Q2 FY23 stands at 60.6 crores as compared to 55.1 crores in the corresponding period last year, with a 10% year-on-year growth. Our operating profit for Q2 FY23 stands at 7.2 crores as compared to 6.9 crores. The operating margin for the quarter stands at 12%. In Q2 FY23, we reported a net profit of 2.5 crores as compared to 2.6 crores in corresponding previous year. The revenue from the operations for half year ended FY23 stands at 112 crores as compared to 88 crores in the corresponding period last year, which is translating into 28% year-on-year growth. Operating profit for half year ended FY23 stands at 13 crores as compared to 12.9 crores in the corresponding period last year, which shows a flattish growth. The operating margin of 12% in H1 FY23. Net profit in HY FY23 stood at 3.8 crores compared to the profit of 3.8 crores. Now coming to the order book, the company's current total order book stands at 601 crores, out of which explosive business comprises around 132 crores. The higher margin defense segment is at 333 crores, which is around 55% of our total order book. And the service segment, that is operations and maintenance, is around 137 crores. This order book represents a strong growth over the previous years. We are confident that with our continued execution run rate, our forthcoming quarters will continue the growth trajectory that we have seen in the past few quarters. With this, we now open the floor for questions and answers. Thank you very much.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question may kindly press star 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, if you wish to ask a question, kindly press star 1. The first question is from the line of Darshil Pandya from Fintrust Capital. Kindly proceed.
Hello, sir. Am I audible?
Yes. Yes, sir.
Sir, I just wanted to, get an idea about, the greenfield expansion which we have done. So, we have received this, we have received the license, right, from the Chief Controller of Explosives.
Okay. Please go ahead, sir.
Hello.
Yeah.
We have all the license.
Some disturbance. Hello. I'll rephrase it. Hello, sir.
Yeah.
Yeah, so I'll rephrase it. So we have received this license from the Chief Controller of Explosives. So, when we expect this orders to start?
See, the new unit, Katepalli unit, mainly the licenses are for assembled rocket motors, for which we already received orders and we started supplies. We have license for high explosives, that is RDX and HMX and their compounds. We have already started and producing. And we have license for bombs and warheads, which we already started producing. We have license for producing mines. We have started producing. We have license for producing ammunition. Ammunition part which is under development with our DCPP mode with the ARD. Once that is complete, we will get into production mode. The point is utilization of the facility. We just started, so the utilization will be at a lower level, and we expect to go to at least 70 to 80% utilization by year ending 2024.
Okay, fair enough. And sir, one of the questions when you said about the cement industry and the coal industry going up in the good numbers, and also the defense. There's a good air about defense in the defense sector precisely, performing well. So where do you see these numbers going up? And do you see any margin efficiency on this part?
Margin deficiency.
Sorry, margin efficiency or deficiency?
No, efficiency, sir.
Yeah, we definitely see it. As we explained and I mentioned in my thing, last year there was a steep increase in the raw materials, because of which the mining sector really we could not, in fact it has pulled us down. But now that part is over. Now because of the demand and supply gap, the Coal India and Singareni, they have revised the pricing policy, and with this now, with the imports not having any restrictions, now the total raw material costs are coming down, and then they are comparable with the selling prices. So that should bring the change.
Right. And you see this raw material prices sustaining for next few quarters, or what? How do you see that?
Yeah, currently it appears that they are going to sustain, because the major Indian suppliers are public sector. So so the government policy is definitely also affects them. So we hope that this present trend, which has come after the experience of steep increase, will continue, which will yield better results.
Okay. And the very last question, the guidance on H2, sir, is it same, or what do you expect for the next half?
I think we expect much better from now.
Much better.
Yeah.
All right, sir. That's it. Congratulations on this good number, and I'll look forward to see you in the next quarter, sir.
Thank you, Mr. Pandya.
Thank you.
Thank you. The next question is from the line of Abhishek Poddar from HDFC. Kindly proceed.
Thanks for taking my question, sir. Sir, regarding the explosives, if you look at 1S22 versus 1S23, the revenues have gone up from 30 to 46 crores. So if you could give us some understanding that how much of that is price driven and how much is volume driven?
The industrial.
No, actually, so one of the detonators division, yes, there has been some price hikes, but in other divisions, of course, the growth has come only from with the volumes. Maybe we can say about 50% came from the price hike and 50% came from the volume side, broadly.
For the overall, including detonators, sir?
Yes, sir. That all including detonators, it comes under the explosives division.
Right. And sir, like we have seen, in terms of raw material, ammonium nitrate prices seeing a correction in last quarter.
Mm-hmm.
So how should we think about the revenues from here and margins from here for the explosive segment?
No, actually the prices have gone up by 200-250% over a period of last 9 months before that. But now it has corrected by hardly by 10%, and now again it is coming back. But actually what happened now, because of the revised terms with Coal India and Singareni, actually we are able to absorb the prices basically.
In olden days, that is 1 year back, the pricing, that is price escalation clause, was being affected once in 3 months, which has affected. Yeah, the price increase which happened today, we were able to get the impact of that after 3 months, whereas in this 3 months period, further increase has taken place. So now that pricing policy has been corrected and changed, and now the frequency of correction is increased. So at the same time, even the markets also have stabilized, and then prices now come down compared to that. So that should really support us.
Okay. So now the lag impact on passing on the prices will not be there, or will there be a 1 quarter lag, sir?
No, it will be 1 month only, the lag.
Only 1 month.
Yeah.
And sir, like on the converse, if the prices of ammonium nitrate fall further from here, would you benefit on the margin side? Is that the way to think?
So with the new price fixing with the Singareni and Singareni, so actually most of the thing will be, whether it increases or decreases, most of the thing will be adjusted against the price. So, but at the same time, we will be left with whatever is the margin which we have drawn at the time of the tender.
Okay, so even if the price is correct, let's say by 20% hypothetically,
yeah,
then next month only your prices will be adjusted. So then margin, you will not be able to keep a higher margin.
Maybe at least 50% will be adjusted at the minimum.
Okay. And sir, on the defense side, so there's an interesting slide, where you have given the opportunities for Akash and MRSAM, Agni, BrahMos, and where you have also mentioned the PL's contribution. So if you can give us some understanding that, let's say for Akash, there is a possibility of 2 regiments getting ordered. What will be our share in that, and who's the competition for us?
In Akash, we are providing all energetic components in it. That is booster propellant, sustainer propellant, and the initiators. So if you look at the supplies made up till now from Akash, whatever bulk supplies made, almost 75% of the requirement has been met with PEL supplies. Now, in terms of finance and the money, I won't be able to say that how much percentage and all those, but the total volume of these energetic materials, 75% of them are met from previous supplies only.
Okay. So the reason I was asking, for example, for one Akash, the order value which, let's say, Bharat Dynamics receives could be 5,000 or 6,000 crores. How much percentage, sir, would be our share in that?
No, our percentage will be much lower than those crores what they are mentioning.
Yeah. So like, would it be like 30, 40 crores, or how should we think? Some understanding if you can give, sir.
I don't know how to answer that question.
Okay.
Because
Understood. No, sir, not an issue. So, sir, the other way to, slide 21, you have 6 missiles mentioned there.
Yeah.
What could be the opportunity size for us, sir, overall, and how should we think about the defense order book for next 1-2 years?
Exclusively for these missiles developed by DRDO, at least we expect some 100 crores of turnover coming from these missiles. All these put together.
And that will be annual, sir, or that's for the entire program?
Annual.
All right. And sir, how do we...
Financial year we can take.
Okay. And that currently is less than 100 crores which is already there in the order book.
Yes.
Right. And sir, this defense order book of 330 crores, how do you see that moving, in a year's time and 2 years' time?
Yeah, many of the IPs are technology transfers which have taken, which are intangible assets. Now they are all getting converted into products and orders and supplies. So this we expect a real good boost, because one more area which I have not mentioned in my earlier questions answer, that is mines. Mines which we started already producing, we qualified, and the production has started now. And main production will come from the second half of the current year, and also it will go to next year. Similarly, the countermeasures, which are again, Premier is the sole supplier from the country. That order is also, we are expecting a big jump in that requirement for emergency procurement and various other things. So putting all these together, yeah, it looks quite bright.
Right. And sir, just the last question, from the MOU with HAL, what could be the revenue stream from that, sir? Yeah,
this is the beginning. We have signed an MOU to cooperate with them and then work together, because you know what is HAL's strength, and our strength is providing them the energetic components and materials for all those things. So it's just beginning. It's too early to premature to assess.
Okay. Thank you, sir. All the best to you, sir. Thank you.
Okay, thank you very much.
Thank you. Participants who wish to ask a question, kindly press *1. The next question is from the line of Nachiket Gandhi from Gandhi Securities. Kindly proceed.
Hello, sir. Good morning.
Yes.
With such a strong order book, sir, how, if you can give a timeline on whether we are capable enough and when can we reach revenues of 500-600 crores annually, with EBITDA improving from 15 to 18%, and through which projects? If you can just brief about the timeline going forward.
Our estimated time for achieving this is, by year 2025, we expect to reach 500 crores turnover.
Okay, and sir, through which projects, if you can weight the projects accordingly?
The contribution mainly comes from the exports and mines and warheads and countermeasures.
Okay, thank you. Also, sir, about the Pinaka Mark II, we have been hearing names of L&T and Tata, but where are we on that? Because in the report also it says production under TOT, Pinaka Mark 1, 2, Mark 1 to yes, but where are we placed on Mark II?
In Pinaka, we are only in the propellant casting, not in the entire rocket motor fabrication. So we are qualified, and we have TOTs are completed long back with HMRL for Pinaka standard, that is Mark 1, and also Pinaka Mark 2. Now it is a question of the other bigger players who are taking the entire program, Pinaka launchers, launching and all those. Now we have to tie up with them. So various MOUs and ties are going on with different organizations. This also can be, Pinaka also can be one of them.
Okay, no, so but where are we currently on that?
We are not directly into Pinaka supplies to MOD, because we are not making the hardware and all those. No.
Okay, all right. Thank you.
We can be only the sub-vendor to the end supplier.
Okay, great. Thank you.
Yeah.
All the best.
Thank you.
Yeah.
The next question is from the line of Prabir Adhikari from Ratnabali. Kindly proceed.
Yes.
Thank you, sir, for providing me this opportunity. I have 2-3 questions. Recently we have done some MOU with HAL, so I want to know, do we have any plans for missile integration? We so far are a component supplier to BDL, so do we have any plan in future?
Yes, we have. We already have the license for integration, rocket motor as well as for missile integration. So what coming here is, because total missile integration involves lot of communications and avionics and various other electronic components and onboard computer systems, seekers. So that part, our facility, we can take up the integration, but that input has to come from the expertise of the other partner. So we already have multiple MOUs signed with all the big partners who are doing it, and we are ready, and we have plans of doing that for others.
So why I am asking this question, because there's a company called Economic Explosives Limited. It's a 100% subsidiary of Solar, which is also in similar line of business like you. They have already submitted their proposals for Pinaka MBRL extended version, as well as other missiles similar to BrahMos and a lot of other things. They are also into SHAPS payload also. So as they are similar line of business like you, and they are doing these kind of activities, so where are we now? First, this is the number one question. Second is, how do we see EEL as a competitor going forward?
See, in the missile integration area, I don't think we are competing with the EEL, because they have different plans. They want to make the full missile and supply to the MOD, probably. From what we hear from the news, that is what is understood. But we have, in our case, our strength is to handle the energetic materials, high explosives, handling and integration and assembly. So we want to stick to our core strength and participate along with other participants who have the strength in electronics and communications and hardware, other areas, and then together we want to participate. That is our strategy. And then yes, we have, it's not one partner, we have multiple partners already in that line.
Okay. So my next question is related to space, where ISRO is providing assistance to private companies so that they can also make launch vehicles, and we are one of the supplier of strap-on motors to these launch vehicles. So do we have association with the companies like Skyroot Aerospace, Pixel, Agnicool, who are on the verge of making launch vehicles?
Yes, see, these are two different things. One is the new startups, they are coming up with their own proposals and designs. Yes, we are working already with them. Apart from that, the second one is the PSOM-XL. The PSL itself is going to be privatized, where we have successfully supplied and qualified as a vendor for strap-on motors. Yeah, there also we have participated with multiple participants in the tender as a partner with them, because we are the only qualified vendor up till now who have supplied and then successfully proven the PSOM. So we already have tied up with them, and it is in the process of finalizing. So I think it is better to announce when it is through rather than at this stage.
So in order inflow guidance, overall order inflow guidance in next 2-3 years down the line, any large ticket order you foresee that you can share with us, please?
See, these are all large ticket only, LRSAM, MRSAM and all these. Large ticket in the sense, it will not go into thousands of crores, but yes, it will remain in multiples of tens or 100 crores range. All these MRSAM, QRSAM, all these productionized Astra, all these what we are going to do along with the BDL as the prime supplier, and we will be providing the propellant and all those. So along with this, we will be also this shafts and flares, because I don't know, you said that others are making, but no, they are yet to prove and supply. We have already, for the past 3 years, we are the sole suppliers to MOD, the countermeasures, shafts and flares and all those. And we are expecting a big jump in that business in the coming 2-3 years.
So can you please can you please quantify the order inflow total, like it would be a 400, 500, whatever, in next 2 years?
I have indicated our total turnover as 500 crores in the next 2 years. So it is not that one volume, one order is going to be that. All these put together will be of that volume.
And so in this 500 crores, you said that one of the contribution would be from exports. So the export margin, what would be the export margin in that, in defense?
What margin, you mean the profit margin?
Not profit margin, I'm saying about gross margin for exports.
It varies, depends on the product, because it is not a uniform margin for everything.
With the current orders in hand, I think the next financial year at least 100 crores should come from the exports of rockets, not other items.
Okay, I'll come in queue, sir, next. Thank you.
Thank you.
Yeah.
Participants who wish to ask a question, kindly press star 1 on your touchtone telephone. The next question is from the line of Devang Shah from Invest Savvy. Kindly proceed.
Yeah, hi sir, good afternoon. Sir, my question is, the company, the way you are perceiving the sector growth, or, as far as defense sector outlook is concerned, that you have just highlighted at the beginning. Sir, as far as Premier Explosive concerned, do you, to capture that particular opportunity, do you have any plan about any kind of, strategic tie-up, any kind of the way you did a MOU with HAL right now? So, you can leverage your product portfolio and that transmit into a, sharp surge in a revenue growth. So can you throw some more light how inorganic way also you want to make yourself, to expand your revenue? Because, your margin looks like, in the range of whatever it is, but if you want to expand your EBITDA by, expanding your revenue growth, do you have any plan of inorganic growth, and how you are, want to capture the entire, this benefit that are going to be there as far as your defense sector is concerned?
Yeah, like I have indicated in my previous this answer, the growth mainly comes from our contribution towards the energetic components of all the big systems. So against that, like HAL, of course, the HAL MOU was announced by HAL and in the DefExpo. So this was, but other than that, we have multiple MOUs signed with all major industrial houses in the country, and they are all at the stage of RFPs where we have participated. We did an MOU with them as a provider of explosives and other components, and also some of them are DCPP programs. It is co-development and production along with the DRDO and the major prime partner and we. So all these together, we are expecting a large growth. Now at this stage, quantifying that may be difficult, but yes, we have. We'll be time to time. We'll be announcing them as.
Yeah, agree. But my only I have a doubt, because the way we are anticipating the sector growth, I just want to get an idea that how Premier Explosive want to capture opportunity as far as revenue is concerned. Just because you are having very wide portfolio of your products are concerned.
Yeah.
So that can transmit it into a good revenue growth, then it would be a phenomenon for the company. So I just want to get an idea. Any outlook that you want to capture, then it would be really benefit for the company.
Like I have mentioned to you, several products we are the single vendor, qualified vendor.
Yes.
That should answer your question where we are and all those. So,
at this moment, we are not looking for any inorganic growth. We are just going ahead with our only products.
Okay, sir. Thank you, sir. Okay.
Thank you. Participants who wish to ask a question, kindly press star 1 on your touchtone telephone. The next question is from the line of Darshil Pandya from Fintrust Capital. Kindly proceed.
Hello, sir. Thank you for giving the opportunity again. Sir, I just had just one question. Sir, the order book is around 601 crores. Okay. So, what is the usual execution period for this order book? If you can give me an idea.
Basically, it varies between 18 months to 24 months, sir. The average.
18 to 24 months.
Yeah, okay. That is for the products what we are producing, and then the other one, that is operation and maintenance contract, that has got a period of another 6.5 years.
6.5 years.
Yes.
Okay.
O&M contract.
O&M contract.
Okay. And sir, one last question. What is the total capex that you have done overall for this?
Capex per?
What is the total amount that we have invested for this capacity expansion?
About 60 crores.
About 60 crores. All right. So thank you so much. Thank you so much.
Include the land value.
Pardon?
That doesn't include the land value, only machinery and buildings.
Yes, only machinery, 60 crores. All right, sir. Thank you so much. Much appreciated.
Thank you. Participants, if you wish to ask a question, kindly press star 1. The next question is from the line of Raghav Rati, an individual investor. Kindly proceed.
Hello, sir. Thank you so much for taking my question. I hope I'm audible. So my first question is just around the stagnant gross margins or the margins that we have reported. Any visibility on how much can we go up from here, say by 2024 from the current levels, just around EBITDA?
So historically, we reached about 18-20% in some of the previous years. I think we have been maintaining 12% for the last few quarters, and that will be improved in coming days.
Okay. So we can expect it to go back to, say, somewhere around 17 to 18% levels.
Yeah, something like that.
It's a possible.
Okay, that's helpful. So my next question is just around the export potential of some of our hit products like, say, the shocks and flares. So any proactive steps that we are taking to, say, find international markets for this almost commodity-like product in our industry, where we can probably outplay our competitors, say, price as well as quality. Any proactive steps there?
Yes, the discussions are going on about participation in the international markets along with the other OEMs from international level. I think we will come through those very soon.
All right. Thank you so much, sir. This is helpful. I'll get back into the queue.
Thank you. Participants, if you wish to ask a question, kindly press star 1. To ask a question, kindly press star 1 on your touchtone telephone. The next question is from the line of Aditi Kasbekar, an individual investor. Kindly proceed.
Hello, sir. Am I audible?
Yes, madam.
Okay. Thank you for the opportunity to ask the question. Sir, this might be a little bit of a preliminary question, given that I'm a little new to this. But sir, your order book last quarter, you said that it was about 646 crores. This quarter, we are saying it's about 601 crore. So my question is, was that on account of the execution done during the quarter? And if yes, then how do we sort of keep receiving these orders? So generally, do bulk of our orders come in the fourth quarter, or how does that receipt of the order book sort of move? I'm asking this since the order book absolute number has gone down from what was reported last quarter to the current quarter.
No, because there was an execution during the current quarter. So we have we have shown the revenue of about 61 crores during the current quarter.
Correct.
So most of the execution has happened from the old orders, existing orders before the quarter. As on 1st July. Okay. So at the same time, we have received some of the new orders which have been added. So there was a difference of about 40 crores. So we can say the net of the execution and additional orders.
Got it. And then do we receive, like, generally, how do you see the trend? Do majority of the orders come in the fourth quarter, or do they uniformly come through the year? Or is there any sort of seasonality to this, is what I'm trying to understand.
See, we have two divisions. That is, one is the industrial explosives and other is defense. Industrial explosives, the orders are placed periodically, that is once in 2 years or 3 years, the fresh tenders are called and the prices are finalized and all those. So for the coming 2 years, the order quantity will keep on depleting only. It will not add up. Yeah, so and coming similarly the O&M contracts, they are also long-term contracts. So only just before 6 months of the next contract, the current contract getting executed, the new one will start talking about. Whereas in defense, it has nothing like that, no season or day. It is as per the requirement, time to time, the RFPs come out, and after participation in the RFPs, it takes the order placement itself. It takes many times from 6 months to 1 year. And after that, execution, there will be a gestation period of 3 to 4 months, getting ready with all those things, and then start producing. Now, in some of the products, that gestation period also took the first half year of that. Mines and others are in hand and getting ready with all the systems and the approvals from the customer and all those.
Understood. So basically then, if we see our industrial order book today, which is about 130 crores or 132 crores to be precise, what you're saying is that over the next 2 years will sort of deplete as we execute more of those. The O&M order book of about 138 odd crores, that again is going to be spaced out over a period of 5 years, is it? That's what you said.
Exactly. The current order, I told you, 6.5 years it is. So just 1 year before the completion of that order, they will talk. In fact, the last order was for 10 years. They could not finalize that, so they extended over this by 1 more year. So we did it for 11 years.
Okay. So this 138 crores then is to be executed over what? The next 6.5 years?
Yes.
Okay. So this is a recently received one, which we will execute over the next 6.5 years.
No, this was received in the year 2019.
2019, which means 3 years have already passed. So another 3.5 years then?
The total contract is 10
Total
years.
is for 10 years. Out of that, 3.5 years completed. So that's how 6.5 years left.
Okay. Total is for 10 years. Okay, understood. Very clear. And then defense 330 crore of order book that you're suggesting will be sort of, they keep coming depending on the RFP and keep getting executed. So for that, you're saying generally the execution is 18 to 24 months.
Yes, exactly.
Understood. Very clear, sir. Thank you very much for the explanation.
And another thing I want to add is there are in O&M contracts and also this Coal India and Singaredi contract, there is a price escalation clause. So there also, based on the prices going up, the order value also will keep on going up.
Okay. Understood. Okay, sir. Thank you, sir. That's it from my side. I'll stand back in the queue.
Right.
Thank you. Participants who wish to ask a question, kindly press star 1. The next question is from the line of Raghav Rathi, an individual investor. Kindly proceed.
Yeah, thank you for taking my question again. So my question is just around the headroom that we have as a company in the coming 2 or 3 years. Given that you mentioned the current order book that we have would suffice over the next 2 to 3 years, keeping us busy, both our plants. And you also mentioned that there is not going to be any inorganic acquisitions that we are looking at currently. Do you as leadership feel that the headroom is only so much limited, or do you think there could be some other aspects where we can probably look at a year down the line and see more revenue coming in?
Like these what in hand they are going to be executed in the coming 2 years or 2.5 years, I told. In addition to that, there are other things which are in pipeline, which are going on, which will keep on adding up. So this will continue. There is enough headroom what you have indicated.
So, sir, could you just give us a sense of the capacity utilization? I know you've mentioned it in the past that it's quite difficult given the product mix to ascertain that. But even a range or some idea about in terms of internally, if you're not looking at other acquisitions, internally, how much capacity do we have as an organization right now?
I think between you know that we have two propellant plants, PDK and Kattepalli, both facilities. Between both the facilities, I think we'll be able to do at least some 200 numbers of rocket motors per month. Yeah, and this is like I mentioned. I think we'll be reaching that 80% capacity level, 70 to 80% capacity level by next financial year, end of next financial year.
Okay. And then maybe we would probably explore options of, say, capacity expansion on inorganic growth. Got it.
Yeah.
Thank you so much. This is helpful.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. T.V. Chaudhary for closing comments.
Thank you very much for your, very, very informative questions I call, because some of the questions have even made us think further and further plans and all those. Thank you very much, all of you.
Thank you. On behalf of Premier Explosives Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.